What do you think are some of the first things I should do from a tax perspective?
I think the first thing is to...
Welcome to the Royal Flush Podcast. My name is John Overy, VP of Sales here at Royal Flush. In this podcast, we cover the ever-growing ins and outs of our state-of-the-art pipelining company. And specifically in this episode, we bring in Matt Robinson, who's a close personal friend, but more importantly, Matt is an expert in the auditing and tax field. If you own any small business or even just in the personal life and you're interested in tax questions, how to potentially avoid paying more taxes, and more importantly, the effect tax can have on your business, this is going to be the episode for you. So take a listen, stay tuned, enjoy. Welcome everybody back to the Royal Flush Podcast. We have a very special guest, a personal friend of mine, Matt Robinson. Matt, welcome to the show.
Thank you.
Thank you for your time and coming in today. Matt has some expertise in probably not the most exciting field in the world, but probably one of the most important: tax, accounting, auditing. And so what today's episode is going to be about, asking Matt a lot of questions, talking about his field, his expertise. We can talk a little bit about personal tax. We're probably going to focus more on business, and we're going to get to learn to know a little bit about Matt's background, how he got into this exciting field, and I got a lot of tax questions to ask you, Matt. Are you ready?
Oh, I'm ready.
All right, let's get into it. So, Matt, we start off with every guest the same way. We do the same thing with you. So tell me about your personal background. Tell me where you grew up, where you're from, brothers and sisters, and most importantly, your most vivid or important memory from a childhood.
Okay. So I'm a homegrown Rhode Islander. Grew up in Cranston my whole life. I'm the youngest of three. I got two older brothers. One lives in New Hampshire, and one lives in New Jersey. And my favorite childhood memory, I'd say this is probably Christmas of 96, 97.
Mine's a Christmas memory too.
Oh, it is. That one item you've always wanted, it was actually a gift item for all three of us. It was a pool table.
Kyle, what pool table, Matt? Was this a real pool table?
No, it was, I want to say it's got like air hockey with it too.
Matt, this is my memory.
That's your memory?
This is the Fisher-Price 3-in-1 tournament pool table.
That is your memory?
That is my memory.
No way.
This is the air hockey, ping pong, and pool.
Oh, yeah.
Matt, that's my memory.
That's your memory.
That is, you stole my memory.
I didn't realize.
That is the greatest gift I ever got in my life.
Yeah. The green felt.
How old were you?
I was 8.
Okay, you were younger. I was maybe 9 or 10.
Yeah.
And I came down the stairs and I saw that thing and I was like, holy crap. Now, as a 9 or 10-year-old boy, I thought this thing was legal size. This is how big pool tables are.
It's official.
And Jesus, with my sister and friends and cousins, I probably played thousands and thousands of games of pool on that.
Yeah, and we've, with the pool table, with the sticks, my father had to fix a lot of drywall, balls going through the walls.
Oh, yeah, no, like at the ball, they were like that big.
Oh, yeah,
right?
Ceilings all chucked up.
Oh, wow.
Yeah.
That is my favorite gift of all time.
Yeah, so it was a gift for all three of us.
Perfect gift for three. But now, only 2 people could play at one time.
Oh, yeah.
So was this a battle, or always like, okay, I got the winner, one's going to sit out and relax?
Battle Royale, winner stays on.
Uh-huh.
So that's what we did. And I have vivid memories. We were playing in the kitchen.
Yeah, where was the pool table? Where'd you set it up?
Well, for Christmas morning, it was set up in the kitchen. But
the kitchen? Okay.
Yeah, I mean, the gifts were everywhere.
Sure.
That was like the only spot that there was actually.
We got a free 4 feet, set it up right here.
Yeah, but mostly downstairs in the finished basement that my dad had just remodeled.
Oh, so this thing is pristine, and you guys are just beating the shit out of it.
Yeah, sticks into the walls, balls going into the walls, yeah.
I had mine, we set up in the living room on Christmas Day, probably for the next day. Then we moved it to my basement, which was the worst, mustiest. If we went down there today, we would get lung cancer, without a doubt. I'm talking black mold, moss. Like, this was the dingiest, wettest basement of all time. Yeah, 100%. Then I feel like I remember I moved it up to my room. Now, my room couldn't have been 10 by 10. It was the smallest, shittiest room in the house. And somehow we played pool in there. I couldn't even tell you how. No, are you a Seinfeld fan, Matt?
Yes.
Any Seinfeld fans out there definitely know the episode where George Costanza's father got a pool table and he has Kramer over in the maestro, and he ends up playing with the little stick because
Oh,
he's
yeah.
banging it up against the walls and everything. That's basically was my room with the sticks.
A great episode.
I bet you didn't know this about me. I feel actually hurt because that was my memory. Now I feel like you've equally stolen it. That was the greatest gift of all time. Mom, thank you very much for the Christmas present. Okay. We'll move off of fantastic Christmas gifts. Tell me how you got into the interest of accounting, tax, auditing. Like what, again, if I'm gonna make fun of you a little bit, it's not the sexiest. It's not as sexy as pipelining, that's for sure.
No.
But what piqued your interest to kind of get into this field?
So, let's roll the dial back. In college, I actually went into college, wanted to do marketing.
Okay.
Thought, hey, you know what? Let's try this out. Took a few classes. Really wasn't my interest. Had to take an intro to accounting course. Really, really enjoyed it.
Okay.
I'm the type of person, there's a right and wrong answer.
Gotcha.
And accounting is that.
Yes,
is
there's
that
not
field.
one. There is only one answer,
Yes.
right? The right answer.
The
only one. The only one that works.
Correct. So, did my bachelor's in accounting. Graduated.
Where'd you go to school?
I went to Assumption College. Now it's Assumption University.
In the good old city of Worcester.
Worcester. So, graduated, got a job right out of college, worked in Boston for about 5-6 years. Ended up wanting to move back down to Rhode Island. Now I'm working for a local company, Ward Fisher and Company, based out of Warwick, Rhode Island. And what I specialize in there is from the assurance side, auditing mostly nonprofits and small to medium sized entities, like closely held businesses,
Gotcha.
similar to Royal Flush.
Okay.
And then the other end on the tax side, it's more of an advisory role.
Gotcha.
In that area.
Now, when you said the word audit, I think a lot of people get really scared by that word. It sounds kind of maybe a simple question, but if you could define what an audit really is, and then maybe help me understand what the purposes of the audits that you're doing. What is the goal, and what are you trying to find in your audits?
Correct. Yeah. So some are compliance based, some are regulatory based. Whether you have financing and the bank needs a review or they need an audit, that's something that my company would do for you.
Okay.
And it's basically making sure that your financial statements and your books are in proper order. And the bank relies upon those financial statements that we review or audit.
Because they're giving you money. And they want to make sure that you're not lying to them.
Exactly. You want to make sure you're meeting your debt covenants
Sure.
and any of your the financial ratios are met.
Yeah. Now, I think again, a lot of people think of that term audit, it comes with a negative connotation. If we looked at it on the positive end, I'd like to think there's a lot of times where you're actually finding things good or you're helping to make sure things are done right. So I would like to think that you're not going in there saying you're doing things wrong, you're trying to do something illegal, let me find them. More, hey, maybe there was a traditional accounting error, or, hey, let me help you understand maybe a mistake that you made, because ultimately a lot of times those financial mistakes can be fixed, correct?
Correct. And most of the time it's a clerical error or an oversight. And what we do is we're the first line of defense, you know. I think when people hear the word audit, first thing comes to mind, the IRS or the state coming in. No. These are compliance audits or making sure that management or your board of directors are analyzing the financials and making decisions based on accurate numbers.
Yes. So you're there to help.
Correct.
Yes.
We're auditors, tax accountants, but I think most importantly, we're advisors. And that advisory role is critical.
Gotcha. What do you think are you've obviously been in the industry, so what are some stigmas around somebody in the tax auditing financial world? What are some things that you've come across? Maybe you meet somebody and they're like, oh, you're an accountant, like, oh, geez, right? What are some stigmas in your business that you think are maybe misunderstood or not accurate?
Well, I think everyone thinks, oh, you're an accountant, you're a bean counter, or or all you do is tax, or all you do is one segment.
Gotcha.
So the accounting and public accounting industry has really broadened where, 40 years ago, everyone was a generalist. Now it's moving towards people are specialists.
I see.
Similar to the medical field.
Okay.
Now 50 years ago, you had a doctor kind of could generalize in most areas.
General
Now,
practitioner, right?
Yeah. Now is, you have this issue, you got to go to this doctor.
I got to send you to a specialist.
Specialist,
Right?
yes.
Gotcha. Now, is that field specialized? For instance, maybe you deal with people in the manufacturing industry or the food industry, or is that more specialized in task special? Like, hey, we're going to help you audit your books again for the bank. Like, what type of specialization is there within that field?
Yeah, so within the accounting industry, it's broken down to many different segments. I think the biggest two segments are tax and assurance. And then within tax, there's corporate tax, there's individual tax, there's business tax. And then there's even specialists that look at state and local tax.
Gotcha.
And then on the assurance end, goes down from nonprofits, corporates, small to closely held businesses. And then within there, there's also governmental audits, nonprofits that receive governmental funding,
Yep.
for instance, or you have a 401k retirement plan. Some of those plans require audits.
We hope you're enjoying this episode of the Royal Flush Podcast, but I wanted to take a minute just to tell you a little bit more about what we do at Royal Flush and how we can potentially help you solve big problems when it comes to your underground sewer lines. Simply put, here's the ask. If you have any issues when it comes to a backup, a slow drain, anything going on with your pipe underneath your building, your house, your apartment complex, your hospital, anything that has to do with an underground sewer line, give us a call at Royal Flush. We'd love the opportunity to come out there, inspect your line, and potentially offer you a permanent solution to solve your problems with our state-of-the-art epoxy pipelining technology. Now back to the episode. Let's get into some specifics. So there's a buzzword that a lot of people say, and a lot of people don't know what it means, and that's a write-off. If you could define for me what a tax write-off is under this big umbrella, how would you define it?
A write-off is a deduction or a legitimate tax expense that reduces your taxable income.
Okay. Again, we'll do another Seinfeld reference. I'm sure any Seinfeld fans out there have seen that where Kramer comes in and goes, Jerry, all these big companies, they just write things off. And he goes, do you even know what that means? And he goes, no, do you? And so I think it's this huge of like misknown of like, oh, well, I could just write this off. What does that really mean? And so let's get into maybe some specifics, and I'll maybe throw out some scenarios. And you can tell me if you think this is something that can be applicable for a write-off, right? So I'm a school teacher, and I need to buy some supplies for my classroom. Can I write those supplies off?
No.
Okay, tell me why.
Well, typically, I'm assuming as a teacher, you're a W-2 employee.
I am.
So typically, as an educator, there is a educator expense. You can take a deduction up to $300.
Okay.
Unreimbursed expenses.
Gotcha.
So a write-off, in that instance, would not be allowed.
Yes. So usually they are almost exclusively tied with a business, correct? So when you're a regular employee of a business, I'm sure there's gray areas within those, but that may get real muddy, right? So usually the write-off needs to be directly tied to a solopreneur, a business expense, or something that have to do with your business, correct?
Correct. With your business.
Yes. And so being a teacher is not technically a business.
No,
You're an employee.
unless you do tutoring on the side.
Okay.
If that's like your side hustle.
Gotcha. All right. So let's say I'm a landscaper and I buy a new piece of equipment. Is that something I can write off?
You can, based on the amount. You may need to what's called capitalize it, and we would depreciate it over its useful life.
Yep.
If it's a small, minor tool, or repair, yes, that can be expensed.
Okay. What about some things to me that get a little more? We'll talk about maybe that private practitioner, right? Say I go to my old family doctor, and he runs a private practice, and he's going to buy some folders for the office, and he's going to get some new tools, a new bench, some new seating, because it's his office. Those are things that he can write off?
Oh yeah, that's a normal expense incurred.
Gotcha. Now, you used the word side hustle a minute ago, and I think that's something that's very, very interesting because a lot of people today have side hustles, right? They're
Yeah.
selling stuff online. Maybe it's a young kid who's cutting grass after, whatever it is. How do you separate or help figure out what within that, what maybe goes to your side hustle or what doesn't? Like, right, I feel there's this gray area of everything. I think tax to me is gray.
Yeah.
And somebody like you is there to help clarify what's black and what's white.
Correct. Yeah, I think the gig economy is what it's coined nowadays.
I've never heard that term.
The gig
Yeah.
economy.
Tell me, what does this mean?
It's typically people that are a sole proprietor or
Okay.
what we like to call in the tax world a Schedule C, and that's basically where you report your business income and expenses.
Gotcha.
But the gig economy, someone's doing DoorDash or Uber
Okay.
Eats.
Fantastic analogy.
That's we've seen an uptick in that area.
The side hustle, right? So I might work at Royal Flush during the day, and I might Uber on the weekends in Providence.
Correct.
Okay. So what can that Uber driver write off?
So any expenses associated with that business or that side hustle,
Okay.
car expenses,
So fuel and maintenance.
fuel maintenance.
Okay.
There may be your cell phone that you have to use.
Yeah.
If you're
What about if I wanted to have some luxuries in the back seat for those people? What if I wanted to have some cell phone chargers and some waters and maybe after a night of drinking, some baby wipes so you can wipe yourself down?
Of course, yeah,
Those are all things I can do?
Those are all items that are applicable to that business.
I see. And what ultimately does that do? I think I know the answer to that. But why are we trying to write things off, or why are we trying to reduce our reported income? Because I think people who have a lower understanding, and believe me, I don't have a great understanding. I got enough to be dangerous. But why are we trying to do that? Why am I trying to lower my taxable income? What's the value of this?
One thing, you're trying to reduce your taxable liability, and the more expenses associated with your business, that reduces your taxable income, and at the end of the day, it reduces how much you actually have to pay in taxes.
Yes. So I think the line of demarcation is whenever you're having a tax conversation, right? Kyle and I are chatting, somebody who's perpetually been a W-2 employee for maybe like Kyle who's only been out of college for a couple of years, or somebody who's had a job that they worked for somebody for 25 years. In my opinion, they don't know what that means because they're not incurring, or they're not trying to reduce their taxable income. In essence, the government takes out of their check whatever they need. At the end of the year, they file their tax return, they get a couple $1,000 back, but they're not actively thinking, how do I reduce my taxable income?
Well, there actually are ways as a W-2 employee you can reduce your taxable income.
Okay, like?
401k deferrals, and that's one of the biggest items is reducing your taxable income.
Okay. Now, for a business person, I feel like a lot of times the goal is to reduce it as much as possible because at the end of the year, you're going to have to pay tax on the quote-unquote income, or what I like to call what's left for after running your business and the operational expenses. You have to pay tax on that money.
Correct.
And so this is the value of having a really highly qualified accountant.
Correct. Yeah, I think tax planning is a huge element within any business. Tax planning, understanding their business, understanding, is there something that they should make a significant purchase towards year end to reduce their, tax liability.
Yep.
I'm not saying go out and buy something just to buy something. You want to buy something that you're going to use, and it's the right piece of equipment or right investment.
Yep, the right tool, right? Whether that's notebooks or chair, whatever it is, right? If you're going to get a return on that investment and you can use it to help you make money, then that's usually a good way to invest in it, correct?
Correct.
Yeah. Now, when we had our lawyer on here, which it turns out that we realized that you knew, John Laterra-Bellina, who we think is a fantastic lawyer, his 3 pillars of business were insurance, a lawyer, and an accountant. So let's talk about some horror stories. I'm sure you've come across these and maybe in your auditing. Let's talk about some of the downsides or what can happen to people if they don't have somebody helping them, looking out for their best interest, maybe how to potentially reduce their taxable liability. What are some scenarios maybe you've just seen from your colleagues, maybe directly with yourself, or maybe even some of these bigger companies that you are helping with the audit process? Tell me something that you've come across that when you look at it, you're like, oh my God, I can't believe this happened.
Yeah, I think everyone's trying to cut down on expenses or sometimes cut corners, and you do get with what you pay for. On the individual side, people who use TurboTax, nothing against it,
Yep.
or any of those online tools. 90% of the time, if you're just a W-2 employee, that works. But there's also, if you have rental properties or you're have investment income or you have side hustle, sometimes those items really need to be pushed to a CPA for, because they're going to ask you the right questions. They're going to ask you the questions that, really dig down on maximizing and reducing your tax liability.
Yep. And ultimately, you're going to be there to help them. So let's say you do my taxes. Let's say I get audited. Who's my first call going to be?
I hope you call Nick.
You. And so when you have a professional or somebody there to help guide you, you can use them to assist you when, God forbid, something comes up, right? That to me is always the value in the relationship with a lawyer, an insurance guy, an accountant, that you can lean on them because mistakes happen, right? You could have made a mistake. Who knows? Mistakes happen all the time. But when they're done by a professional, then you can lean on them to help guide you through how to fix it, and ultimately 99% of the mistakes can be fixed.
Exactly. When people get those tax notices from the IRS, they freak.
I've gotten some.
And say, oh, let me just write the check and pay it.
Yep.
Well, take a moment, read it, send it to your accountant or your professional. They'll read it. They get these all the time.
Yeah.
And you know what? Sometimes the IRS does make mistakes too.
Yeah. I've gotten some, and I took in a picture and said, Matt, help me understand what this means. I have no idea what this is. And you walk me through it. And usually it's, hey, maybe I missed a payment before. Yeah. Or it's just, oh, you don't have to worry about that. Actually, it's a double up on, right? You end up figuring it out. What are some goals for you? What do you want to do within your professional accounting ability, right? Is this, we'll do a little more personal digging here. Do you want to own an accounting firm? Do you want to retire being an audit? Tell me kind of what some of your aspirations are and the goals within like the accounting field of how you can maybe progress in your career.
Well, going back to the accounting, so there's really 2 big fields. There's either private accounting or public accounting.
Okay.
I've been in public accounting my entire career. I really enjoy it. It's something new and different every day. I'm not going to the same office. I deal with several different clients in several different industries. So that's what I really enjoy. Is I like working within the public accounting arena, and eventually potentially becoming a partner.
Okay.
Within a firm is one of the biggest goals.
All right. And then what about on your personal aspect? Let me learn a little bit more about you and your family. I know you got a little one at home, right?
That's correct.
Yeah.
He'll be 2 next month. So my wife and my son, we reside in Burrillville, Rhode Island. And what else do you want to know?
Where do you like to vacation?
I really like the White Mountains. It's a nice little getaway. It's in driving distance. I stayed at your rental property.
You did.
Great host. A nice house to stay at. It served the purpose of multi-generational families, grandparents, in-laws, brother-in-laws.
Your brother lives up there too, right?
Yes.
New Hampshire's fantastic. We could talk about New Hampshire for 700 hours. Let's dive back into some of the accounting stuff. What do you think are maybe some, like, top three, right? You're talking to a friend of your brother's, and you chit-chat, oh, man, you audit stuff, cool. What are kind of some, maybe like 2 or 3 big do's and don'ts, right? What is maybe the bigger things that you're giving any advice to somebody? Here's some things you should do. Here's some things that you shouldn't do.
Well, I think everyone tries to think they can deduct everything or write off.
Yep.
And that's a misnomer. You really need to dig deep. The tax law is thousands and thousands of pages, and there's a lot of exceptions, rules. Sometimes there's extensions, and I think really working with a CPA or a tax preparer and build that relationship. That's one. 2, maintain your records. I think that's another item.
I've got a bone to pick about this, okay? Janice, my lovely mother-in-law, why do we need to keep receipts? It's 2023, okay? Tell me if I'm wrong. Janice loves keeping receipts. We've talked about it many times. I now understand the purpose of it and the goal. But in 2023, it sounds ludicrous to me that I am supposed to keep records or identify of something that I bought 2 years ago. Why? Help me understand that better.
If for any instance you were audited by the state or federal government, they would need you to substantiate that expense and make sure it's a legitimate business expense.
Now, why couldn't you do this? If I bought everything on a credit card, my credit card company has all those records. It's itemized on every single monthly statement. Why do I need to keep a receipt for something that's bought on a credit card?
Well, so you bought something on Best Buy, and there were multiple items.
Okay.
Well, how do I know you just bought one item, or you bought 10 items,
Yep.
and 5 of those items are at your house, and the other 5 are at the business? It's really itemizing and actually just proving that they are legitimate business expenses.
Now, I understand it. I understand the importance of it. Don't you think it's ridiculous?
I think
In 2023, there's got to be a better way to keep these records.
I mean, these records don't need to be physical copies; they can be electronic copies as well.
But you still need to keep a receipt electronically. There's got to be a better way, Kyle. There's got to be something around where you can easily dig up something that you purchased a couple years ago. There's got to be a better way. So talk to me like, I mean, we're little. What about a big company? How do they keep these records?
Many of their records are stored electronically.
Okay.
They have ERP systems. They have sophisticated accounting softwares that really drill down on this expense and the backup documentation right within the system.
I remember with my past job, we had an app, and I used to have to scan in the receipt, take a picture of it, upload it, itemize it, and put the expense in, and then it got sent off to the cloud land. And so that was their version of electronically.
So that app most likely integrated with their accounting software or the ERP system.
Yep. And then allow them to track and keep. So if they could drill down anywhere in the country that this person went out for dinner with this guy, and that was the reason, and that was the amount.
Correct.
Amazing to me. Absolutely amazing. There needs to be no more receipts. What about any other tips or tricks? Like, is there anything? Because I think when people talk about tax, I feel like they only talk about it December 31st and April 15th. Okay, so what could some things that we could be doing better throughout the year, not only maybe for our tax person, but like we can more strategically think about, say, our business and tax implications all the time. I think that's what I've learned most here at Royal Flush is that tax is not a December 31st and an April 15th thing. It's really a 365 or
Correct.
252 working, whatever it is. And so, like, what are some things or maybe some tips you've given to past clients, or like how can we be bettering understanding and working with it every single day?
Well, I think one thing is timely financial reporting from a management perspective and understanding, keeping your finger on the pulse and having timely financial reports so that you could make accurate decisions
Yeah.
from a management perspective. If you don't have those timely reports, you might be shooting from the hip.
Yep.
And you might be making a business decision that might not have been the best decision.
Yep.
So having accurate and timely financial, so most people do either a month-end close or they look at quarterly financials, and just being able to put your finger on the pulse of the business is one of the biggest things. Because sometimes you'll ask a client, "Oh, how did your tax year go?" I don't know. Well, you don't want to be answering that question like that.
Yeah.
You want to know.
Right.
We broke even, or we were 10% up.
There's money in the bank. I mean, we're doing okay.
Yeah.
What we've tried to do specifically this year, and we literally bought a new truck today for our business, is in the past when we were smaller, we would wait to the end of the year, figure out a number, right? What did we want to reduce our burden to spend on equipment? And I was like, this is crazy. This is bananas. If we need a piece of equipment, we should be buying those really as we need it, not at the end of the year just to spend it. But we should strategically be buying them throughout the year as we need them. So instead of waiting till December 1st to figure out what we need to spend, let's just spend that throughout the course of the year.
Correct.
And spread those costs out, however we're going to finance it, maybe pay for cash, whatever. But more importantly, it's not September, let's wait till December to get the truck. Why? We can get the truck now, help us make money, and ultimately it's going to have the same impact whether I buy it in September or December. So, I don't know, 3 monthly payments, the truck's going to be making us money. Do you come across a lot of people who maybe who wait and wait and wait and wait to make maybe those tax or financial decisions a lot of times?
Yeah, I think there are still people that wait to the end of the year and say, "Oh, I need to buy something, XYZ."
I know you've talked to people on December 30th. Without, right? You probably have hundreds of stories like that.
Oh yeah. Oh, we need to buy this. We need to buy that.
Well, you probably can't buy a truck on December 31st at 4 p.m. when the dealership closes at 5. I don't know if you're gonna be able to do it.
No, but there are other techniques. Bonus payrolls or accrued profit sharings. Those are other techniques to reduce your taxable income, where it may not be a asset purchase.
Sure. Yeah, so let's delve into those. You just kind of laid out two. One of the little tax loopholes I think is really, really interesting is the Augusta rule.
Oh, yeah.
Tell me about that, Matt.
So the Augusta rule, if anyone's a golf fan, that's where the Masters is played. And the big golf event of the entire year, everyone from around the world travels down there. Well, hotels can't accommodate everybody.
Well, let's give people an analogy. Okay, if you had to give a state or a city in Rhode Island, the Masters is in my opinion, it's in Woonsocket. It's not a nice area. The Masters is in just Woonsocket, Rhode Island. It's not in Atlanta. It's not in Savannah. It's not in this gorgeous. It's just a regular, everyday town.
Oh, exactly.
There's not a mecca of hotels or restaurants. It's just you pull off the side of the road, and here is the most pristine, most beautiful, luxurious, exclusive golf course in America.
Yeah, so the Augusta rule, it's in Augusta, Georgia, and going back to the Augusta rule, it basically allows you to rent your house or your rental apartment up to 14 days, and it's excluded from taxable income.
Yep. So if I live down the street in Atlanta, or really anywhere, if I live here in East Providence, I can rent my house out to whoever I want for whatever dollar I want for up to 14 days a year. Not consecutive, right? It can be any 14 days.
Any 14 days.
And I can just take that as pure income. I don't have to declare it on my taxes,
That's
right?
Correct.
That's pretty. By the way, did you know that I am going to the Masters this year, Matt?
No.
I am going.
Awesome.
Me and my buddy Ben, we're going for Monday practice round.
Oh, did you? Okay.
He won the lottery, got 4 tickets.
So last year, my friend Pat won the lottery, and he went down for the Monday practice round as well.
I've heard the practice rounds are better.
Just being
Yeah.
on the grounds is phenomenal.
Well, so here's what I'm going to do. I have to bring $5,000 to spend in the pro shop. Anybody who's a golf fan knows that you can't get, well, I mean, you can get a second hand, but you can't get Masters merchandise anywhere. They do not sell it. Just a little American outline with the flag. They do not sell it anywhere. It's only sold at the Masters. So I'm going to buy hats, socks, T-shirts, underwear, everything. And then I just want to walk around the course. I really just want to see it and like feel it and walk around and see some players, but that's what I want to do. I want to walk around for 12 hours and have my feet kill me because I heard it's extremely hilly. And I would just say that I've been there.
Yeah, that's on my bucket list to attend to. So.
Yep, so I'm super excited about that. Okay, so we got the Augusta. Anything else in your mind that's like kicking around that like technically anybody can use the Augusta rule, right?
Correct, anybody.
So there any other kind of loopholes like that come to the top of your mind that everyday people, or you've got this small business that you're trying to reduce your income that maybe people aren't thinking of off the top of their head?
What I see a lot too is if you're a business owner and you have kids, put your kids on payroll.
Okay, tell me what that would look like.
So you run a company, your kids are 12, 13 years old, may not be able to get a job yet, but they're working around the office doing filing,
Cleaning.
Yeah, any administrative task. You could put them on payroll up to, it's always indexed for inflation, but let's say 12,000.
Yeah, it's like 11, 12, 13,000, something like that, right?
And that's a write-off or deduction on the business end, and that individual won't get taxed until after $1 after the 12,000.
Yep. Now, also, I could be wrong on this. Tell me this. I've seen some videos on this. Couldn't you also then open them up a Roth IRA?
You can.
And take the full 12 and dump it right in there?
Yes, you can.
Tax-free.
Yes. That's the double.
Yeah.
Double whammy.
That's a really, really cool way to do that. So walk me through that process. So a Roth IRA traditionally is post-tax, right?
Correct.
I will get my W-2 income. Let's just call it, I get $1,000. Government takes all their stuff out, and I'm going to put $100 in. That $100 comes out after the government's taken all their stuff.
Correct.
401k is pre-tax, so that gets taken off of my gross, right? Gross or net? Yeah, gross. So $1,000, I'm going to put 100 in. The 100 comes out. Now I only have 900 that's taxed, right? Those are kind of basically the same thing, but two different ways to get the money.
Correct, but you also go look at depending on your age or your, Roth. Those earnings are going to grow tax-free.
Yep. So when you take it, when you're 70 and you've got $1 million, you want to take out $1 million, it's liquid cash.
Exactly.
Ready to go. Where a 401k is taxable.
Correct.
Yep. So if you had a 13-year-old kid, so Mark has Rylan. If we technically hired Rylan to work 5 hours a week to come and clean and sweep the shop and help Janice with filing, and we paid him $10 an hour, so we're going to pay him $50 a week. Okay. At the end of the year, whatever that math out to be, let's just call it $5,000. You could then take that $5,000, open up a Roth IRA. So now he's 13 years old. He has a Roth IRA. He doesn't get taxed on any of that money. We at Royal Flush, in essence, gave Rylan $5,000 of something we would have paid taxes on. And that can start building and accruing for his future retirement. And then when he's old, that is literally 5,000 times, hopefully whatever it is it's growing, liquid cash, real money taken out.
Exactly.
Do you know anybody who's doing that?
We have a few clients that do that, yes.
Yeah, I think it's a fantastic, phenomenal way. I think the vision is like, okay, you let the kid keep a little bit of money for working, and you put the rest away, and it's like you're checking 3 boxes. Like, okay, reduce some of my taxable income.
Saving for retirement.
Let the kid start working a little bit, saving for retirement, and so that's like a triple whammy. I think it's really, really cool. We do a profit sharing here at Royal Flush, and that really was the what's the word I want to use? I don't know. That was the goal or the driven behind it was an additional way we could reduce our taxable burden at the end of the year. And so, what is the difference between that and maybe just traditional 401k, or like why would somebody do that?
It all depends on your business. How many employees you have, what type of, retirement plan you want set up. I've seen some where there is a match, and then there's also a profit sharing on top of that. Going back into the employee benefits.
Yep.
That's, it all depends on, how the company's structured.
Yeah.
You know, how do they want their benefit package?
Yeah. Now, correct if I'm wrong, I could be wrong on this, but say I maxed out my 401k, right? I have a 401k, and which is I'm almost 40, so is it 18,000, 19, 21? What is it?
It's like 20, 21.
21? Okay. So I maxed out. I take the 21,000, put it in there. If my company profit shared with me, and at the end of the year, say I got $20,000 in profit sharing, that would also go in the 401k, correct?
That's correct.
Above and beyond the 21 that I personally maxed out.
Yeah, so every year the IRS, issues tables of, things that are indexed for inflation and caps. Obviously, you can't just give yourself $1 million.
Yes. So there is a cap on the
So
profit
there's
sharing.
a cap, yeah.
Yeah, because that could be a way to, loop. Everybody's trying to find a legal loophole, right? So let's say my company was doing amazing and I had $10 million of liquid cash, right? End of the year, everything's expanded. I bought everything I wanted. I literally have $10 million. What I couldn't do was pay myself my regular salary, put $9 million into a profit sharing, and just give myself $9 million in my 401k.
Yeah, you can't
I
do
could
that.
not do it. That would leave a red flag and be like, what's going on here?
Well, yeah, there's also rules within ERISA, making sure that plans aren't what's called top heavy.
Sure.
They want to make sure that it's beneficial and equal for everybody.
Yep.
Both in management and non-management employees.
Now, this is a question you can probably answer closely, but I don't know if you could answer perfectly, I'd be pretty impressed. How do I know what my tax percentage is? If I'm just a W-2 employee, right? I think everybody's got like, I pay 27%. I don't know. If I make 100,000, I pay 33. Like, how the hell do I know what I'm actually paying in taxes?
Yeah, so there's two tax rates. There's the effective tax rate and then there's the marginal tax rate. So you'd have to look at your taxable income and there's charts. And you basically see, say you're making 50,000, you go to that chart. All right, 50,000 is my taxable income, and it shows you the effective and the marginal tax rate.
Now, correct if I'm wrong. If I look at the 50,000 and I scroll down and it says 28%, okay? It's not 28% of the 50,000.
No.
Okay, walk me through, because
it's incremental.
it's incremental. So that's where I think it gets confusing. And when even if I looked at, so if I make $100,000, I look at the chart and I go down 33%. I don't pay 33% of $100,000 in tax.
No, it's incremental.
Yeah.
And I mean, I don't have the.
Come on, listen, I told you if you could answer this off the top of your head, I'd be very impressed.
Yeah, so it's incremental. The first 20,000 you're taxed at this percent. The first 40, and then from 20 to 40,000 you're taxed at this rate.
Yep.
So on.
And that's
so
going to
forth.
progressively get bigger. The taxable percentage is going to get bigger the more income.
Yep, for every
that
dollar
you make.
more. Yep.
Yes. Okay. Any other kind of little loophole-y things that are in the back of your mind? So we talked about the Augusta rule. We talked about some 401k things. What else is poking around in that brain?
Going back to the Schedule C, I'd say it's loophole. It's a legitimate tax write-off and deduction. It's the personal use of home office. So you do a side hustle and you have an office at your house. It's maybe a spare bedroom, but it's you use it as your office. You have a desk, computer. You can deduct general home expenses associated, maybe based on the square footage. So say your house is 2,000 square feet and that office is 500 square feet.
Yep.
Let's say. So 25% of home expenses like electricity, heating,
Internet. Yep.
those types of expenses can be associated with your gig economy, your side hustle expenses.
But again, associated with a business. So if I'm a W-2 employee who works from home, can I expense those?
No, you cannot.
No, you cannot.
And that really raised the question
Yep.
when COVID came in and everyone was working from home.
Yep.
But you're a W-2 employee.
Yep.
That was no longer an inapplicable tax deduction.
So this raises the question, or really the advice. Everybody should be creating some form of their own business. Do you agree or not?
I think if you got the entrepreneurial spirit definitely do it.
Mm-hmm.
There's a
Because
lot of tax incentives.
the
as well.
tax incentives or the ability to legally, what I call legally manipulate those in the right way, the benefits are unbelievable, right? And so Kyle, I think Kyle's multimedia should be started, and you should moonlight, not on Royal Flush time, okay? And do these little things, and you could create a home office to reduce it, and you could do all this stuff. You could get a computer, right? All those things could help reduce it, and you could create your own little. Now, here's the other thing: like Kyle's business could maybe generate $500 next year, but he could maybe write off. How much could he write? He could write off a lot of stuff. How many years in a row can a business create a loss?
3 years.
3 years.
consecutive years, or else the IRS sees it as a hobby.
Ah, okay.
And so there's hobby loss rules, and you can't deduct any of your hobby losses, but you have to claim your hobby income.
Yeah.
So it has to be a legitimate business.
Is there a dollar? Is there a dollar amount that classifies as a business?
No.
No. So if I brought in $1,000 and I only showed that I had $100 profit, that's a business.
Yeah.
Technically, that's a business, right?
Technically, that's a business.
There's no minimum, almost like, you gotta, I know for taxable income for a regular grown up, not the kid, is what? Like you don't get taxed under, is it the first $12,000?
First $12,000.
Yeah. So basically, if you work, you're me, 40 years old. I work, I make $12,000. You don't pay any tax on that money,
Correct.
right? That's free money. You don't get paid any tax. Everything over that is when the government starts asking for your money.
Correct.
There's no stipulations or kind of like line of demarcation for a business.
Schedule C's, yes, there are. So if you make $100, you're gonna be taxed on that.
Okay. $0, doesn't matter.
Yeah.
There's no grace period where they're going to say, we'll let you keep all that money. Don't worry about it. Okay. I don't know if you know the answer to this. Do you ever get involved with or understand what happens to all of our tax money when it goes to the government?
That's $1 million question. So, all the tax revenue, it's appropriated, and
Yeah, so help me, let's break this down. What do you think, now it's all electronic, but where does the money go? What do you think happens to it? Whether you know the answer or not, I want to know your thoughts and opinions. So it's April 15th. I used TurboTax, or I hired Matt Robinson to do it. And I owe $1,000. Write the check to the IRS, comes out of my account, boom, $1,000. What the hell happens after that?
it goes to the U.S. Treasury,
Okay.
and then any state tax.
In the basement. They got to have the money in the basement, right? I can picture there's counting money down there, right?
It's the U.S. Treasury, I'm assuming it goes into a certain account. All the wire transfers, all the.
You're just popping it up. It's like 8 kabillion here, 7 trillion here. Actually, they're all negative. They don't actually have any of the money. It's all negative.
Yeah. So, there's many different departments within the federal government that oversee those funds.
And then from there, it's being appropriated back.
Yeah, the OMB, the Office of Management and Budgets, appropriates it to
The thousands and millions of city, state, local, federal level. Then you've got the whole umbrella that is the federal government. Then you have federal employees.
Yeah, there's so many different governmental funds that it'll go into.
Yep. And then that's, in essence, in those. But you see, the interesting thing from my perspective, which is something that I always have a hard time with, technically, the government does not generate $1 of revenue. They don't sell anything. They technically don't manufacture anything. They don't sell any goods. They do not bring in any revenue.
Unless you count postage.
the business runs at a loss.
Yeah, they don't make money on
It's
that.
negative. So the only way these things are funded is by the people,
Tax.
right? Federal tax dollars. Every single person funds these. So to me, that's just, I would love to be able to see the inner workings and understand, but like, how can they, quote unquote, have a P&L? You don't bring in any money.
Well, it's all levied.
Yeah.
Well.
So the money, I can imagine literally like, okay, just Apple A, government industry Apple A, boop, you guys get $5 billion a year. Boop, $5 billion gets put in the account. That's what it starts as. And then from there, expenses, right? Everything just gets deducted off of that with the hopeful goal that it ends at zero. God forbid there be a little bit of surplus. It's probably negative.
Yeah. So,
Right?
So it's called fund accounting, and that's governmental accounting. That's a
I would call it fun accounting because it's make-believe, right? We just make-believe fairy tale numbers here.
yeah. So fund accounting. There's each. There's a debt service fund. There's the pension trust fund.
Yep.
There's the general fund. You might hear that a lot. So there's all those funds work together to balance everything out.
Now, why do people get tax refunds at the end of the year?
So tax refunds is an overpayment. It's related to you paid in more than your tax liability. So typically, a lot of refunds are from W-2 employees. They have money withheld each pay period from their paycheck, and it's essentially an estimate.
That's those 8 things in your check: the FICA, Social Security, all these 4-letter abbreviations, right? These guys, I call them. This FICA guy is always taking my money. Why can't they figure out? And well, in the grand scheme of things, nobody should be getting a refund. Shouldn't it always be zero? That means that you've paid the appropriate amount of tax. They didn't take out extra, right? Shouldn't it be zero? Why can't it be zero? Why is it not zero?
It can be zero. It's very unlikely that it would be zero. Sometimes it can be user error when they're filling out the W-4. The W-4 is the withholding. Typically, when you start a new job, HR sends you a bunch of documents
that you don't know how to fill out. You're like, I don't know,
and you're like,
right?
Okay, my tax table is this. All right, my dependents, exemptions, etc. And sometimes it's filled out wrong, and have more withheld. Sometimes, if there's a spouse might be a Schedule C employee or that works in the gig economy, they're not having withholdings taken out. So the spouse may have more taken out to compensate for the spouse's income.
But if technically everything was done right, at the end of the year when you did your taxes, you would go, okay, everything's all set. No money. You're not giving any money, and you're not getting any money. That would be in a magical world, right?
Correct. And everyone has a different philosophy on it. I don't want to give an interest-free loan to the government throughout the year.
Yep.
Other people say, hey, you know what? Come February, March, I'd like to have that little extra.
Yeah,
bump.
take a little extra. Take an extra $15, $20 out of me now, and give me a couple grand.
Yeah.
At the beginning of the year, great. A lot of people, whether you believe it or not, right along, I think, really, in my opinion, the tax refund is a stimulus plan, right? 99% of people, whether it's $5 or tens of hundreds of thousands, what are they doing when they get their refund?
They're going to go out, spend it, go on vacation, go out to dinner.
They're going to use it to enhance or enjoy their lifestyle, right?
Exactly.
Whether how big or small. Well, you know what? We've been needing to get a new piece of furniture for the bedroom. That's $1,200. We get the tax refund. Let's go get the furniture, right? Me and the wife haven't been out for a really, really nice dinner. We want to go and enjoy ourselves, spend $500 on this beautiful dinner. We're going to use our tax refund for that, right? We've been planning a trip. Let's go to Mexico. It's $2,500. Use the tax. That's what people use the tax return on.
Exactly.
That's what everyday people do. So I look at it it's another version of a stimulus. We're gonna take a little bit extra of your money. We're gonna give it back to you. Just gonna pour it right back into the economy anyway. Keep the ball rolling. That's kind of my philosophy.
Oh, exactly. And it was their money to begin with.
Yeah. You're not getting money back from the government. It's your money.
Yes.
They took a little extra from you, and now they're just gonna give it back to you.
Correct.
That happens on the state. I mean, last year I got a little bit extra back from either Massachusetts or Rhode Island, and there was I believe the term is there's a surplus in the general fund.
Yeah. So the Massachusetts has a law where if there's a surplus, X percent, based on tax you paid in, it gets allocated and given back to the taxpayers. We currently do not have that right now in the state of Rhode Island. There's talks within the General Assembly. We'll see if anything comes from that.
Yep. So that was, I mean, I don't know what those numbers are, but they're going to give themselves a buffer. Like, we want to have $1 billion kicking around, but anything above that, we got $2 billion. What we'll do is we'll divide it up against the millions of people we have, and we'll give everybody their money back, right? So it was $600, and they give it back to you. Does that? I feel like that doesn't happen very often.
The surplus was due to the inflation. So costs are rising, but the governmental expenses were staying relatively stagnant.
Yep.
So they were able to cover their expenses, and especially on the sales taxes where they really had the excess surplus.
Interesting. Okay. So give us some advice, Matt. If I'm Kyle and I'm going to start my little media company, what do you think are some of the first things I should do from a tax perspective?
I think the first thing is to consult a CPA firm, a tax consultant,
A tax professional.
a tax professional, exactly, and sit down with them. You want to generate a business plan. Having a business plan, really legitimizes your business
Yep.
in the face of the IRS. The other thing is, wanting to know your goals. Are you going to have employees? Are you just going to be you as the single owner? Are you going to have business partners? And then you got to look at, okay, do you need insurance? Do you need a lawyer? Going back to John's, a triple threat, as I call
Yep.
it. The accountant, the lawyer, and the insurance agent.
Yep.
Starting out with those three, with those three individuals is pivotal to hit the ground running.
Gotcha. Okay. And then what about the personal side? What advice would you give to somebody who's just been using TurboTax their whole life?
I'd say 90% of the time, it's fine. Sometimes questions that ask you may not be specific to your situation, and that's when a tax professional can really hit home on those questions and dig deeper and provide more personalized tax planning tools, tips and tricks on maximizing and reducing your tax liability.
Yeah. So I think I can only speak from my personal aspect. Is, when I was younger and my first couple of jobs and making an everyday work living, I brought the TurboTax. You did it for an hour or two, and it's cool. But as I've gotten older, as I've been a little bit more successful in my life with my wife and I, and we've started getting some properties, it started to become a lot more complicated, right? And so as my income has increased and my liability has increased and my net worth has increased, now it's time to bring somebody in to help guide and figure all this out, right? And so I think that would be my advice, that, the older you get, you can look at this good or bad, the more complicated usually things get. And I think in the better way, right? You're hopefully and ideally making more income, so thus your tax burden is higher. And ideally, in this case, you're not eggs in one basket, you're diversifying your life somehow, right? Maybe you're starting that side business. Maybe you're upon that retirement age. That's a whole nother tax thingamajig and how to handle it. Maybe you're getting properties or investing in a business, and a lot, right? Your things are happening opposed to when you're 26. You're just working, you got a car, maybe you got an apartment, a house, right? Very simple. So as life grows, you get a little more complicated. Thus, you need to bring people in to navigate that complicated, because I am not a tax professional. I do not know how to do it. I don't know what I can write off and what I can't. And I think that's really when it's the right time, just on a personal level, if you're a W-2 job. Let me bring somebody. Everybody has a friend or somebody they know who's like you. That's how I met you, right? Friend of a cousin of this, and that's how I met. And we're like, oh, well, Matt's pretty smart in this. And then we get to know with personal relationship. Oh, Matt's a nice guy. I trust him. And now also he's an expert at this. Matt's going to be my guy now, right? So everybody knows somebody who's in this world. And I think you'll know when it's time to potentially bring that tax professional into your life.
Correct.
To unmuddy the water.
Exactly.
All right, Matty, we're going to start wrapping it up. It's going to be a twofold question for you. One, what would you tell, or what advice would you give to your younger self about anything in life? Maybe you can gear it professionally towards your career. Personally, what advice would you give Matt Robinson, who's 17, 18, 19 years old? What would you tell him today?
I'd say don't be afraid to try something new or something that you think is difficult. If you think it's difficult, well, you just set a goal for yourself, and being able to work through that. And then the second thing, network. Network. Get out there, meet people, go to events, network with people. Going back, everything's about relationships.
Yep.
No matter what type of industry you work in, everything is about relationships.
I don't love the old saying, it's not what you know, it's who you know. I don't like the fundamentals of that, but who you know, not in that aspect, in your life, in your business, is going to help you become either a better person or more successful, right? The more relationships you have with people in other things is going to help you grow your business.
Correct.
More personal relationships you're going to help is going to build a personal bond better, and you'll have just a better relationship with somebody. So less the I think of like an old-fashioned mob, like, oh, who you know. That doesn't apply anymore. But when you're networking, you're going to come across somebody in your world who maybe just bought a new commercial building and is expanding their footprint in manufacturing, and they use your firm, and you have a relationship with the owner, and he's had a clog or a backup, and he's trying to figure it out, right? That's how simple it can be for networking. So it's not, it has nothing to do with that guy calling me. It's I knew Matt Robinson, who actually happens to work for that guy who just bought a building who needs their pipeline, right? That's how you grow your business. And I agree. Networking is a huge, huge, huge thing. All right, so you would wrap those. Tell me again. So what were your piece of advice?
Always try something new. Don't be afraid of starting something different or new. I feel like getting into the uncomfortable situation shapes you and molds you and
Absolutely.
And then getting out there networking and meeting different people in different industries. Those are the two biggest things.
Okay, I agree. Any last piece of advice or knowledge you would like to pass along to us and the listeners before we wrap it up?
Any of those that are listening, if you are seeking any tax professional or audit work, you can reach me at awardfisher.com is our website, and you can give us a call, 401-384-6464.
Okay, fantastic. Well, Matt, thank you very much for your time. We're going to end the episode here. I hope everybody maybe learned a little something. Maybe you can rent your house out for 14 days. You can go to the Masters. Maybe you're ready to hire a professional at that point in your life because things are getting complicated. And we're going to end it there. Matt, thank you so much for your time. We appreciate it today.
Thank you very much, John.